My name is Jane Gray, and I'm with Jane Gray Homes, and I am here today in Vienna with Don Gay from Fairway Mortgage. He is both a branch manager and a loan officer. Good morning, Don.
Good morning, Jane.
Good
How are you?
Yeah, I'm doing well. Yeah, thanks for agreeing to be interviewed this morning.
No problem. Glad to be
Awesome.
here.
Okay, well, so tell me a little bit about your business.
So I have been in the mortgage business for about, it'll be 30 years this January.
Wow.
I started when I was in college at a Northeastern University in Boston. They have a great co-op program. And when I graduated from Northeastern, I stayed in the mortgage business, and that's the only thing I've ever known how to do. So,
So you're pretty good at it.
I like to think I am. Yes, because I have nothing to fall back on. So,
Funny. So just for folks that maybe have never been through the loan process, can you tell everyone about, what do you go through when you're getting a loan to buy a home?
well, the most important thing is to be prepared and start your homework well ahead of time. What we see is that there's really no reason for a potential borrower not to talk to somebody like me months ahead of time before they purchase, because what we can do is instruct them on how to get all their ducks in a row so that when they go through and they get serious about buying a home, the loan process will go as smooth as possible. There's no cost and there's no obligation to sit down with a lender. A lender cannot sell you a thing until you actually have a home that you're going to be purchasing. So there's absolutely no cost, there's no obligation to sit down with a lender and figure out where you are in the process, what you need to do to get things in order, so when you do get serious, you're ready to buy. And in this market right now, we're seeing that it's a seller's market, and buyers need to be prepared to be able to potentially make a quick offer with a quick closing. And the only way they can do that is if they have all their ducks in a row as far as getting their mortgage pre-approved.
Okay. As I understand it too, there's a reason that you would, maybe if you had some bad credit, you might be able to help them get that cleared up ahead of time too, right?
Absolutely. So one of the key things, obviously, and most people know, is credit score is going to be key into, number one, getting approved, but also it is a very key component, especially with most first-time home buyers. It's a key to what your monthly payment is.
Right.
And a lot of people think, well, I should have a really good interest rate because I have a really good credit score. That is true to some degree, but it's even more important to have a good credit score when you have somebody who is usually a first-time home buyer who's putting less than 20% down, because those buyers are going to have a situation where they're probably going to have to pay private mortgage insurance. So just getting a little off track here, but if a buyer is going to be buying a home, they're putting less than 20% down, they usually have to get private mortgage insurance, PMI, and the rate for that PMI is very dependent upon what somebody's credit score is.
Oh, really?
Absolutely. In fact, I talked to a client not too long ago, and they were in the very preliminary stages. Actually, it was a friend of mine, and he said, "Oh, we have great credit. Roughly what would it be looking at for monthly payments on a house of $400,000, whatever it was?" So I ran the numbers, assuming they had great credit. When we got a little more serious, I pulled their credit, and the credit score wasn't bad. But it was in the high 600s. And the difference in the PMI was about $180 per month.
That's considerable.
It's considerable, yeah. And if they were to come to me early in the process, what we can do is we can look at somebody's credit and determine what it is that makes up their credit score. And there's also an analysis that we can run that will show us, okay, if you do this, this, and this, then you potentially could get an increase of 20 points, 30 points, 40 points, whatever it might be. And if you start that process early, you have time to do that. If you're going to go to settlement in 2 weeks, there's no time to get all that stuff done. But if you're maybe working in a 2 to 4, 5, 6 month range, depending on your credit score, that would give us enough time to increase the credit score enough and hopefully reduce the monthly payment and make it easier for you to qualify.
You know, that is so interesting. I've sold a lot of homes and I never knew that the credit score affected the PMI. So thank you.
No problem.
So tell us a little bit about why somebody would go to a private company or, like not a bank. Wells Fargo, I bank with Wells Fargo or I bank with Cap One. Why would I go to Fairway? Why would I come talk to you, Don?
Sure, I get that question quite a bit actually. So in the world of mortgages, there's on the one end of the spectrum, there's the banks, and everyone knows what a bank is. That's what the Wells Fargo's, the Cap Ones. You go in there and you deposit money in there, and you have a checking account with them.
Mm-hmm.
But they also provide mortgages. On the other end of the spectrum, there is a broker. And
Mm-hmm.
the broker doesn't have any money to lend out. In fact, what they do is they find the banks or investors, as we call them, that do have the money to lend out, and the bank or the investor makes the determination to whether to lend the money or not, and it's
Mm-hmm.
their money. The broker's just there to facilitate the deal. They make money off it. They're very, very helpful, but they can't say, "Oh, I'm going to give you a loan," and they close you. What Fairway is a hybrid between those two. It provides we're called what's called a correspondent lender. So what we have is we actually have a big line of credit, as my CFO likes to call it. We have a big giant credit card, and we use that credit card to make loans to people.
Mm-hmm.
And we make the lending decision. We determine whether this loan is what we call a saleable loan or not. We close the loan. Then after you're in your home, then we sell it off. We'll sell it off to Fannie Mae, Freddie Mac, FHA, VA. We'll sell it to them directly.
Okay.
And then we pay out to use that money after we sell it to them to pay off the big giant credit card.
Okay.
But what it gives us is the flexibility to be able to underwrite a loan and close it very quickly. But also, not only do we deal with Fannie Mae, Freddie Mac, FHA, VA, but we also deal with a group called VHDA, which we'll probably talk about here in a little bit. We also deal with USDA loans.
Mm-hmm.
We also deal with some of these very odd type loans, like or odd lenders, I would say, outside the box lenders, let's call them.
Okay.
For instance, I had a gentleman last month that he was newly self-employed, and his tax returns didn't really show a lot of profit, let's just say that. We had a program that we looked at his bank statements for the past year, and we saw that he had plenty of cash flow
Mm-hmm.
in his business, and we were able to make the loan to him. We closed that loan, and we're going to sell it off to that investor afterwards. But we're able to do that very quickly, even on an outside the box type of loan.
And the Wells Fargos of the world can't do that, right?
I won't say whether they can or not, but I don't think so.
All right, fair enough. So, what's the interest rate like right now, and is now a good time to buy
Well,
or refinance?
It's a good time to refinance. Interest rates are great right now.
Are they going lower?
That's the question, isn't it? There's a question that people ask me all the time. They say, well, what are interest rates doing? Are they going up or are they going down? My answer to that question is yes. They're doing both. They're constantly moving. They're basically still in a downward trend, although it's not a steep decline, which is kind of nice. And you're hearing a lot about historic lows. They are pretty low. We hit a high last November, or at least a high in the last couple of years was last November. But the low right now is low for the past since then. But it's it was still low like 2 years ago. It was even lower than where it is now. But a lot of people that bought like last year, they're finding it's a great time to refinance. But not only that, what we're also seeing is that maybe the interest rate is not substantially lower, but maybe they have an increase in value.
Mm-hmm.
We have seen that in this area, that values have gone up. So maybe a year or two ago they got a fairly good rate, not too high, not too low. But now they're in a position they might have 20% equity and they can drop that PMI.
Right.
So they get a little lower rate, they drop the PMI. It makes a lot of sense to do it, to refinance at this time. As far as purchasing goes, I always say there's never a bad time to purchase a home. Some people say, well, right now interest rates are low and values are good. It's a great time to purchase a home. Absolutely true. But even when interest rates are high, what we're seeing is that you can buy an asset, the house,
Mm-hmm.
that's only going to increase in value. yes, we did see a small dip in values. In some areas, saw a bigger dip, but in the Washington D.C. area, we didn't see much of a drop in values. In the outer areas outside the Beltway, they did see a significant or a somewhat significant drop in values, but inside the Beltway and in D.C., even in 2008, we didn't see much of a value. So if you buy an asset that's going to be increasing in value, even if rates are higher than they are now, at some point while you own that asset and it's increasing in value, rates are going to drop, and you can take advantage of that by refinancing. Then you have the best of both worlds. You have the asset that you bought that has increased in value, and you get a low rate at that time.
Yep. Awesome. Pretty smart. So I understand that you do special type to get, grant money for, so basically down payment assistance. Can you walk us through one of those programs, or just tell us a little bit, how does that work? Who can qualify?
Sure. These programs are actually, this is something that I've really delved into in the last 5 years or so, and I really enjoy doing it because it allows people to buy homes that normally would not be able to buy a home. And in some cases, they're getting free money, and literally are getting free money. Where
I want free money.
Everyone wants free money. I know that makes it easy to sell something when it's free. So the Virginia has one, DC has a program, Maryland has a program. They all have different programs, and I like to call them the down payment assistance programs. But under that umbrella of down payment assistance, it could be a second mortgage that they're giving the buyer so that they can get in with no money down. Sometimes they don't have to pay that second mortgage back. Sometimes they do. Sometimes they don't have to make payments or they don't have to pay it back until they sell the house. Also, though, there's some grant programs. And in Virginia, VHDA has a grant program. VHDA has many programs.
Mm-hmm.
I'm sorry, I should say VHDA is Virginia Housing Development Authority. And VHDA is a nonprofit group. They started in 1972. They were started by the state of Virginia, but they are not a government entity at this time. They are a separate entity that is nonprofit.
Okay.
And the reason why I keep saying nonprofit is because what they have done is because of, if you know anything about nonprofits can't keep their money.
Right.
So they have to give it back. So they are a successful organization and a mortgage company, really, that's making money, but they can't keep it. So what they do is they essentially give their profits back to potential buyers in the form of grants to purchase a home.
Mm-hmm.
So in Virginia, that program that they have, that would give either 2% or 2.5% of the sales price to a potential buyer for them to use for their down payment or closing costs. Thus, a buyer can get in with as little as 1% under that program.
Wow.
So a buyer can come in, they can put down 1%, and they'll have 3% equity instantly. So again, it's a great deal. It's a grant. They do not have to pay it back. They could sell that house the day after they bought it, and they don't have to pay the grant back. They never have to pay it back. And the program allows for has very good interest rates. It has low PMI rates. They have something called a mortgage credit certificate, which gives a tax credit, which is huge. And a lot of people don't even know about it, but that's probably the biggest feature on the whole.
That's
VHDA.
why they should talk to you, right?
Yes, they should. They should. The
see
MCC
his number at the end.
The MCC, the mortgage credit certificate, is worth thousands of dollars year after year after year as they buy their home.
Wow.
So it actually it in the end, if you're keeping your home for 3 or 4 years, it actually ends up worth more than what the grant is. It's that big of a deal. So the whole package that VHDA offers, that's one of their programs. They also offer no money down programs. They offer even less than no money down, where they'll lend up to 101.5% if somebody has good credit. So in other words, they'll lend them the 100% to buy the house, and then an additional 1.5% that they can use towards their closing costs. So it really helps the first-time home buyers. And these are not programs, the crazy programs that they just came out with that you saw back in the 2000s that brought the mortgage industry down. these programs have been around for years. They're tried and true, and they work. The people do pay them back. Not everybody, but they're great programs to help first-time home buyers.
So just to transition a little bit, can you, for new, home buyers, tell us a little bit, maybe tell us a story or something about what not to do when you are under contract? Because I've seen it, but I'm sure you've seen a number of crazy things.
What we don't want to do is, and this is going to sound really funny, is we don't like cash.
Why?
Because we can't trace cash at all.
Oh, could be drug money.
It could be drug money. That's what everybody says. And my answer to that is, it's fine if it's drug money. As long as you have receipts and invoices and a business that we can trace it to.
All right.
That is one of the biggest problems we have, is that people will have cash where they lent their friend $2,000 2 years ago, and now they're buying a house, and the friend gives them the $2,000 back in cash. They for whatever reasons, maybe it's an ethnic reason, that they like to store cash at home.
They don't trust the banks.
They don't trust the banks.
Got it.
That's a big problem, and it's literally, it's one of the bigger problems that we have that most people think isn't a problem. The reaction I get from clients is that they'll say, well, what's the big deal? It's money I'm putting in the bank. It's not money I'm taking out of the bank. And I say, yes,
and it's cash. Cash is king,
cash
right?
is king, right? But the problem with the cash is we can't trace it. We don't know where it came from. And one of the things that they look for in lending is that what they see is that, number one, if somebody has skin in the game, like we were talking a little while ago, then they're more likely to pay their mortgage on time. Mm-hmm. But if you're going to buy a house and you have no skin in the game, that you got money from an uncle or somebody else, then you're less likely to care about paying your mortgage. And that has proven through in payment histories for buyers. But yes, cash is probably the most difficult thing. So I've had a situation where I had a gentleman, and he had a business outside the country, and before he bought, he went back to his home country, took a bunch of suitcase full of cash, came back into the U.S. and put it in the bank and said, there's my down payment and closing costs.
Yeah, I could see where that might be problematic.
Yeah. And we really could not come up with a good answer on how to fix that problem, other than waiting 2 to 3 months for that money to quote unquote season, and then we could find him a house. Right. So it was, we were pulling our hair out trying to come up with ideas, but there really isn't anything when you have cash because it's not traceable. So it goes back to the whole thing of talk to a lender early, get your ducks in a row, because if that same buyer had talked to me 3 or 4 months before he's going to buy, and we talked about where's the money coming from for your down payment, he would tell me he's going to fly home a week before settlement and get a suitcase full of cash. I would have said that's a problem. Fly home today, get the cash, put it in the bank, we'll season it, and then buy a house in 3 or 4 months.
Okay. That's good advice. Okay, so any other comments that I didn't ask you, or you just like to make any last?
No, I would
points?
say that probably the biggest thing is that to get talk to a lender as soon as you can when you start thinking about purchasing a home. Again, me as a lender, we can't sell you a thing unless you have a home. Unless you have a home under contract, or you're buying a home, you own a home right now. So there's really no reason not to talk to a lender. Like I say, the pre-qualification and pre-approval process is no cost, no obligation. Mm-hmm. The only thing it's going to do is take a little bit of your time. But if you go through that process of getting pre-approved, and 3 months later you call me up and say, Don, I'm not going to buy a house now. I'm going to move to California, or I'm moving out of the country, or whatever, then I say, great, thanks for letting me know. Good luck to you. You don't owe me a thing, and we're done. So there's no reason not to. Excellent.
Okay. Well, and so you should come and see Don and talk to him. Thank you for choosing to be interviewed this morning, and I appreciate it. And if you have any questions about mortgages, you can talk to him. If you have any questions about real estate, please feel free to contact me. If you know anybody else that would like to be interviewed, please Facebook message me or contact me in the link below. Okay? Thank you so much.
Thank you.